We absolutely expect more volatility, and in fact, volatility to steadily increase as we get through our midterm elections here in the U.S., which we think will be disruptive no matter what the outcome. We also think investors are nervous about not just a host of domestic and geopolitical issues, but also concerns over just how far this bull market has run and whether or not it's entering its last leg. We think that for fundamental reasons, whether we're looking at economic data, earnings, still low interest rates by any historical measure, there's still room to run, but we know that fundamentals can be overwhelmed by investor psychology if momentum turns sustainably negative.
Okay, well, where do you invest then in a volatile climate like the one we're seeing right now?
So we're expert managers of managers. We invest in active managers whose risk and return track records over bull, bear, and different market cycles is stellar. We think right now that healthcare continues to be an area that has great growth prospects long-term, but also offers some near-term defense. We like dividend payers as well as dividend growers, in particular dividend growers. It reflects management that is battle tested. We like battleship balance sheet blue chip names, both growth and value sides of the ledger. And then we think in the small and mid cap space, we tend to like established markets here in the US, but also Europe, in particular Japan as well. Companies that are selling goods and services right out their back door to neighbors who are not all that overly influenced by currency issues or even geopolitical issues.
You mentioned before that you expect that the midterms coming up in a couple of weeks are going to be disruptive. How disruptive and why?
Well, they'll be disruptive, we think, if the Democrats take the House, because there will be concerns over whether or not the Trump administration will be able to continue along its path of so-called pro-growth agenda and policy issues. We think if they do not take the House and the Republicans remain in power, then the risk of trade war with China, at least the fear of that risk, likely escalates. All that will settle down. The market will be pretty quick to price in what it knows rather than what it fears. But we definitely think leading up to and through the very near term of this U.S. midterm election, we will see a spike in volatility, and investors need to steel their nerves and certainly review their portfolios, make sure that they are well balanced in terms of risk assets like stocks and relatively lower risk assets like bonds.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.